For years, Lululemon was the gold standard of premium athleisure, a cult brand built on buttery soft leggings, wellness culture, and a tight community of followers. But in 2025, cracks that were long hidden have begun to show. Comparable sales in North America are slipping. The stock has shed more than half its value, and its bold diversifications are now under scrutiny. What went wrong with a company once seen as unstoppable? Today, we trace the rise, the hubris, and the fall, or at least the stumble, of Lululemon. Lululemon was founded in 1998 by Chip Wilson in Vancouver. He noticed that most yoga clothes were baggy cotton blends that absorbed sweat and stretched poorly. He believed he could engineer performance fabrics that were also flattering, and thus the brand was born. Wilson chose the name Lululemon, with multiple L's to sound foreign or exotic. That mystique, combined with a premium release strategy, set the tone. This was not meant to be a mass-market yoga brand. Instead of big ad campaigns, early Lululemon gave free pairs to yoga instructors, ensuring product visibility in classes. Their tote bags doubled as walking billboards. The brand positioned itself not only as performance apparel, but as a lifestyle and status symbol. Wear Lululemon, and you signaled discipline, taste, and wellness. By 2007, revenue had surged, turning approximately $149 million that year, and Lululemon went public. In the following decade, annual revenue leapt from a few hundred million to over $3 billion by 2019. Between 2009 and 2019, the company famously avoided heavy discounting, mimicking the discipline of luxury brands, and leaned into community engagement through in-store events and ambassador programs. By the late 2010s, Lululemon was moving well beyond yoga, introducing men's casual wear and accessories. Even as late as 2022, the revenue growth remained strong, a 30% jump year over year. Although early signs of the mirror acquisition burden were visible, by fiscal year 2025, the trailing 12-month revenue figure was about $10.59 billion, up nearly 10% over 2024. In the second quarter of 2025 alone, the company recorded about $2.5 billion in net revenue, a 7% increase year over year. The first major crack came in 2013. Lululemon launched a line of yoga pants that turned out to be too sheer, causing customers to see through them during certain poses. The company had to recall up to 17% of its pants, losing nearly $67 million in the process. Chip Wilson compounded the crisis by publicly suggesting that some women's bodies aren't right for Lululemon pants, statements that were widely condemned as fat-shaming. In the fallout, Wilson stepped down from the board in late 2013. The brand then attempted to pivot to more inclusive sizing and broaden its appeal. Still, the reputational damage lingered, especially among women who remembered the comments. Over subsequent years, executive turnover became a recurring theme. Changing CEOs and shifting strategies eroded internal consistency and diluted brand authority. Moreover, as Lululemon sought to appeal to broader audiences, some longtime fans believed the cult character had become diluted. The exclusivity that once gave Lululemon its edge began to fade. By the mid-2020s, North America, the company's core, began to show signs of saturation. Comparable store sales in the Americas started flatlining or even declining. In Q2 2025, while international comp stores grew about 15%, North America comps fell by nearly 4%. Many analysts now warn that virtually everyone in the US who wanted Lululemon already has some. In 2025, the stock has dropped by over 50% till date. In 2020, in the heat of the pandemic-fueled home fitness craze, Lululemon acquired the interactive fitness mirror company called Mirror for about $500 million. Lulu hoped to combine hardware, content, and community to create a recurring revenue engine beyond apparel. But as gyms reopened, demand for expensive at-home mirrors collapsed. By 2023, the company recorded an impairment of $442 million on the acquisition, essentially writing off the bulk of its value. It also signed a partnership with Peloton, effectively conceding Mirror as a failed bet. By 2025, Lululemon was itself admitting that lack of newness in its women's core lineup was hurting growth. Meanwhile, fashion trends were shifting. Oversized fits, baggy pants, and loose silhouettes were gaining ground, diametrically opposite to the body-hugging cuts Lululemon was known for. Simultaneously, younger competitors like Alo and Vuori emerged, combining premium aesthetics with sharper streetwear appeal. These brands moved quickly, opened stores near Lululemon outlets, and captured market share. In 2025, Lululemon even had to file a lawsuit claiming that Costco's Kirkland line included striking dupes of its popular pieces for a fraction of the cost. In recent years, inflation, interest rates, and economic uncertainty have all made consumers more price-sensitive. Premium apparel is among the first categories to be trimmed from discretionary spending. Tariffs have also hurt margins. Lululemon disclosed a $240 million gross margin impact related to U.S. import duties and the removal of certain exemptions. In March 2025, it lowered its full-year growth guidance, and the stock fell 11% on the same day. One of the biggest takeaways from Lululemon's story is that brands should never stray too far from what made them great. The company's $500 million bet on Mirror was a reminder that chasing hot trends can backfire, especially when you lack a real moat in that space. But even staying within your core isn't enough if you stop innovating. Lululemon itself admitted it had become too predictable, with stale product lines that no longer drove excitement. The plan now is to increase the share of new styles from roughly a quarter of the mix to more than a third, an ambitious effort to reignite momentum. At the same time, brand clarity has become just as important as fresh designs. Lululemon built its identity on exclusivity and prestige, yet in recent years it has tried to be more accessible. That inclusivity helped broaden the audience, but it also diluted the mystique that once set the brand apart. Striking the right balance between reach and exclusivity will determine whether Lululemon stays a premium symbol or slides into commodity territory. With U.S. growth flattening, international expansion has become the company's lifeline. China, in particular, delivered a stunning 39% sales jump in late 2024, and global markets continue to offset weakness at home. But those markets also come with risks, from geopolitical tensions and trade wars to rising local competition, leaving little room for missteps. Meanwhile, the brand is being squeezed on all sides by competitors and inexpensive dupes. And looming over all of this are inflation, tariffs, and shifting consumer spending that no company, however strong, can escape. So is this the beginning of the end for Lulu? Not quite. It still has scale, a loyal base, and global opportunities. But to recover, it must recommit to the bold designs, coherent identity, and innovation that it once symbolized. Thanks for watching this video. And don't forget to subscribe to the channel for more such business breakdowns.